We got our U.S. employment report today from the BLS for the month of February, which was supposed to be about 50,000 jobs created. Instead, it was 92,000 jobs lost, a much bigger negative report than anyone expected, which means the U.S. employment market remains pretty weak compared to historical standards and puts the Fed in a bind between their dual mandate to support employment and to contain inflation. Now, the Fed's been leaning towards defending inflation recently and assuming that the labor market would hold up. And this is a poke in the eye at the Fed with that because the job market is looking weaker than most people imagined it might be at this point in time, substantially weaker with this lower jobs report. So that puts the Fed between a rock and a hard place. And it makes it hard for the markets to try and determine which way the Fed may actually go, whether they'll raise rates to hold inflation in check or whether they'll lower rates to support the employment market. They're caught increasingly between the two. And this is a classic recipe for stagflation, lower employment and higher inflation. But remember, the US economy is 70% consumer spending. And when the employment market weakens, that undermines the consumer's ability to spend.